Welcome to this exciting course on intercompany service charging. In this course, we are going to showcase a powerful solution on intercompany service charging. So as you can see in this process flow, we're going to show some intercompany cost recovery allocations. And in those allocations, you see that they're going to trigger intercompany transactions. And in those intercompany transactions, we have a powerful solution that is going to be used to pull intercompany transactions in sales and distribution and create sales orders from those intercompany transactions and generate billing documents. From those billing documents, the sender company code will be able to generate invoices, text invoices, and they will be able to issue an invoice to the receiver company code. And we're also going to see the IDOC functionality where the receiver company code is receiving costs and automatically the invoice is recorded in their system. Overhead cost controlling is a powerful SAP tool that can be used for cost allocations. And the good thing is this tool allows the use of cost allocations or cost recoveries across company codes. But the limitation is that once we do the cost allocation across company codes, will not be able to recognize revenue from that transaction, will not be able to issue a text invoice to the other company code which could have consumed our services during the month. We have provided a solution to close this gap where we'll be able to issue an invoice after doing a cross company code allocation. Let me show you the system demo. Here I'm showing one of the cost allocations transactions, which is direct activity allocation. And in this transaction, I'm just going to do a cross entity allocation where I'm doing cost recovery from another entity. So we have cost sender 33 and cost sender 80. So cost sender 33 is in our sender company code, which is company code 1000, and we have cost sender 80, which is in company code 1005, where we want to recover costs from. So we have an activity type 17, which is an actuarial support activity type. So we're using that activity type to recover actuarial support costs from company code 1005. So in other words, we're charging for the services that we provided to company code 1005. So in this case, we have a quantity of 40 hours that we are charging, that we provided services to company code 1005, and the price per hour is 300. So the total that we want to recover from company code 1005 is 12,000. So after posting this transaction or this cost allocation, the system by default is going to create an intercompany transaction. And that intercompany transaction, that's where the gap is. From that intercompany transaction, we cannot recognize revenue, we cannot issue a text invoice. But that is a requirement according to IFRS 17, that if there are two different legal entities, we should be able to issue a text invoice if we provided services or if we are recovering cost from that entity. So we have a powerful tool, a powerful solution that allows us to generate sales orders from allocation transactions. So this is directly from a direct activity allocation that we did, and now for the same amount, we are able to automatically create a sales order, as you can see in this screenshot. The same amount of 12,000, the same quantity of 40, the same service, actuarial support, is now sitting in our sales order. So this powerful solution is going to allow us to create billing document for that activity allocation that we did in controlling. And you can see here, we are able to create an invoice, able to create a billing document for the same amount of 12,000. And now the system is adding tax of 1,800 because the tax is 15%, and it's adding tax. Now we're billing 13,800 to the affiliate, to our affiliate company code. So now, as we can see from the billing document, we'll be able to generate an invoice. Yes, let me repeat that. We are able to generate an invoice from the initial transaction that we did on KB21N, which is direct activity allocation. Now we're able to generate an invoice that we can actually issue and send to the other company code. And with the creation of a billing document, that will generate an actual accounts receivable document. As we can see here, we have an actual receivable document with an actual customer. So the other company, we're treating it as a customer and we're booking a receivable in our books, and we're booking the actual revenue of 12,000 with a tax of 1,800. And the system is diligently deriving the profit center and partner profit center from our initial transaction, which was the activity allocation. The system is also going to automatically create an IDOC. The moment we create a billing document, the system is going to automatically create an IDOC that is going to post an AP document in the receiver company code automatically. As we can see here, we are creating a document in company code 1005 as an AP document. Instead of sending an invoice to company code 1005, and once they receive the invoice, they're supposed to book that as an incoming invoice. The system is doing it automatically in their system. Well, this is the AP document that I was talking about, which has been booked in the books of the receiver company code. As we can see, we are debiting our expense account, crediting the vendor, which is the supplier company code, or the sender company code in our initial transaction, in your initial transaction code KB21N, which was the direct activity allocation. So this is the process, purely functional. There's no development in this process. It's purely configuration.